Good morning, everyone, and welcome to the last day of the calendar quarter. And if you can believe it, we are now halfway through the year 2022. And the way things have been going, it couldn't be over soon enough. Hopefully, the bear market will be over soon enough. But anyway, let's just take a quick run through the market here so we can set up our trading day, and then we're going to head over to the trading room. So to begin with, I have a weekly chart here of the S&P. And what I've done here is just, mention some key levels and overlaid the 2008-2009 bear market. And I did that because I did want you to see that even though that was a terrible bear market, we ended up losing about half the value of the market at this point, and this is all drawn to scale. At this point where we are now, we had a pretty nice rally. The rally took us, actually, it briefly touched the 61.8% retracement of this entire decline. Now, remember, this is a weekly chart. So we're at about that same point now. And with the positive seasonality of the next 10 days, the fact that the market's extremely oversold, people are very negative, and actually for good reason. It is, the unexpected would be a nice retracement here. And who knows? I mean, that's the thing we always have to remind ourselves is we don't know. We deal in probabilities, but it is important to keep this possibility on the table. In fact, I think I'm going to name this broadcast. I think a good name for it would be, it might be this or it might be that. And those of you who know me know that it drives me nuts when people get up there and say, well, it might be this or it might be that. You really want someone to tell you what's going to happen. And of course, nobody can really do that definitively. I'm still just slightly leaning, ever so slightly, like 50.0001 for a rally here. And we started out, it looked like the June 17th bottom was a V, but the V didn't follow through, and we're really at that point now where we may do a full-blown retest of the June 17th low. And I could see us moving down, like here's the weekly chart, I could see us moving down to the 200-week line and the 3,500 level, maybe even before that rally starts. And that's, not atypical of these types of markets. So let's just keep both possibilities open. If we take out the lows, or maybe even have a spike panic low into the 200-week line and 3,500 area, that would not surprise me. But on the other side, the market could easily, after that spike, take us back up into this 4,200 range. Both possibilities are on the table, and even in day trade, everything's fractal in the markets. I don't care if you're on a monthly, weekly, or even a 1 minute chart. It all works the same. And I think you want to constantly be asking yourself, if this, then that, if not, then what? You're always working with both sides. And then you can let the price action guide you. And speaking of price action, let me mention a couple of other quick things. If we go over, we're about to end the quarter and the month. If we go over to the monthly chart and just kind of come in here pretty close, you'll see, remember last month's chart was a nice pivot where we basically opened and closed at about the same level, really at about the mean on a monthly chart. And really, we haven't gone a lot below last month's low, the May low. So, we did retrace quite a ways up the bar. We weren't able to get to a new high on the month, but we haven't gone too far below it. So most of the price range in June was spent inside the May bar. We are certainly right at the low of the May bar right now. So I think how today goes can tell us a little bit more. I always tell people every bar, whether it's a monthly, daily, weekly, is its own trading range. So if you look at the May bar as a trading range, we weren't able to get above it. That's a sign of weakness. We did get below it. That's also a sign of weakness, but we could close right on it, meaning there isn't a lot of change. We're sort of back into some kind of a trading range. So keep that in the back of your mind. Always, pay attention, but these bars don't matter until the bar actually closes. Also do note though that we are still one time framing down, meaning each monthly bar has a higher low, a lower low and a lower high. And again, that's pretty negative price behavior. So, and then on the weekly chart, this really kind of illustrates the point. If you look here, these are the May lows, right? And so we've spent the last 3 weeks sort of in a little trading range here below the May lows. We'll see where the bar closes today. So as we look inside of this, we get down into our daily and other charts. Again, we see a little bit of a trading range down here. Still has the shape of a diagonal. Now, one other possibility, and nobody's talking about because everybody's so bearish, but this could be a cyclical bear. Now, what's the difference between a cyclical and secular bear? A cyclical bear is usually about a 20% decline. It is a more like an exaggerated correction within a bull market time frame, and it doesn't last as long. I mean, a cyclical bear is about a 4 to 6 month bear market, whereas a secular bear can last a year and a half, as we saw in the 2007, 2009 bear or the 2000 to 2003 bear. So they occur over a shorter period of time. They don't fall as much. And the only reason I mention that is because I could make an argument that this is an A, B, C correction. And the reason I want to mention that is when you look at diagonals or wedge patterns, they only appear in 3 places. They either launch a rally as a 1 wave, end a rally as a 5th wave, or they appear in C waves. So one possibility is this is an A, B, C cyclical bear that ends here or maybe down on the 200-week line at 3,500 target before we launch maybe even a more significant rally than forecast here. So again, we just want awareness of all these different possibilities so that we're not surprised by the price action. But from there, we just monitor the price action bar by bar, and that will tell us everything we need to know. So I want to mention those 2 possibilities. Let's just jump over briefly into today's sandbox. Now, if you follow these videos, you know that every day and every week I create a sandbox. I call it my playground for the week. And the reason I do that is I want to keep my charts uncluttered. I don't want a bunch of stuff on my chart. I write algorithms and things to really help me with my rules, but I don't want my charts cluttered up. Now, this looks a little cluttered because they did it for your benefit, but basically, I want to know what the expected move is for the week, which is the market will stay within that range 70% of the time. I want to know what the expected move for the day is, because again, the market will stay within that range 70% of the time. And then I can focus on, I look at that as kind of my windshield. I can focus on what's going to come into my windshield within that frame. I mean, you can look a little above and a little below, but generally within that range. And I don't really care about anything else. I don't care where the 5-minute line is or the 200-day moving average. I don't care. If I'm not going to encounter it today and I'm not going to encounter it this week, why do I want it cluttering up my chart? So I only put up what's relevant. And what's relevant today is we've got the 21-day line, or this is a 2-hour chart, by the way, using overnight data as well as daily data. And the only things that can possibly, right at the top of the range for today, is the 21-day line, or what I call the mean. And that's going to definitely provide a little resistance. We also have the double top that we put in over here earlier in the week. Now, the thing about a double top is you have to remember a double top is a weak structure, meaning it's more a sign of exhaustion than it is, some kind of powerful reversal. So double tops can easily be taken out if we get back up there. So I'm not going to allow myself to be influenced greatly by that. But we do know from this volume node I've been talking about all week at 3710 or 3910, high volume nodes where we're looking at volume at price. When you have a high amount of volume at that particular price, it becomes a hurdle, whether you're coming from above or below, to get over, and it's going to provide a little bit of a stall. So earlier this week, we did manage to get a little bit above it and back up into this low volume node here, but the market did turn on us. We put a double top in here, and we now have dropped below the 21 or the daily mean. And again, that's a bit negative. And then yesterday, as we came down, notice how we stalled right on that high volume node. Again, that's where the most volume occurred, around the 38.27 price. And when the market tried to go up, the 5-day line held it back. Generally speaking, when you're in a short-term downtrend, you want to short from the 5-day line, and that's what we saw people doing yesterday. And of course, as most of you know, the weekly expected move low, which is right here, was right in the middle of that price action. So what I saw was the market just rotating around the expected move low as dealers basically worked that area to either, defend their positions through Friday's close, or to maybe just get out of them, because, we do have this crazy day today where all these options are expiring. It's calendar end, month end, etc. So these, we did see a lot of that yesterday. In fact, yesterday was one of the tightest trading ranges of the year. The market barely moved. So we did, however, overnight, because now we're looking at the overnight data, we've now dropped below that node, and we're now coming up on the one I've been talking about all week, which is the 37.75 area. So this is your critical support. This is your critical resistance. And I talked earlier in the week, we had this air pocket sort of above, and that's why the market moves so fast, and also why it moved so fast when it came down. Now we have another air pocket below us. And quite frankly, if you look at the bigger picture, there's not much to catch us until we get to about 3,500 if we really get into a steep decline. So 3,500 is still kind of my short-term target if we're going to go down. I still think, and if you go to our website and read the current market thesis, I've been predicting since January that we would eventually move to the 2,500 area on the S&P, which is the mean of the 100-year channel. So I haven't abandoned that position. We evaluate it every day. But I do believe that that's a good estimate for where this ends up. It could take a while, though. It's not going to happen overnight, and we will see some rallies in the middle of that process. One other thing you might want to take a look at here, let's go back to a daily chart, and let's get rid of some of that clutter there. All right, get rid of the supply and demand, and we'll get rid of a few labels here. So let me just put up the cycles, because we haven't looked at that in a while. And the cycle that we're focusing on, you can see we're coming out of a cycle low here, And we've got another one here in mid-August, but the big one is going to come down in September, October. Surprise, surprise. So let's keep an eye on that. This, kind of came out of a 20-week cycle low here. And so we've got a little bit of upward power, but eventually you've got the down cycle, and this down cycle. So that's where it's going to get super ugly, assuming we can survive the moment. So for today, not a great day-to-day trade. There's going to be a lot of distortions from the expiration. If you go to the blog, I mentioned the walkaway trade today. Take a look at that. I encourage you to join us over, just go to the website, blueprinttrading.com or blueprintquantitative.com. Drop the E from Blueprint, but join us over there and join the trading room. We have a lot of fun. We make a lot of money. It's just a fun thing. We do that on Tuesdays and Thursdays. So all in all, tough day to trade today, just like it was yesterday. A lot of expirations on the table. Take a look at that walkaway trade. And I think really for the most part, we'll see, we've got some key, red letter reports pre-market. You got the PCE, you've got consumer spending. So definitely, and by the way, watch that. 15 minutes after the open comes the Chicago PMI. That could screw up the opening range trade big time. So keep an eye on all those things. However, also remember that tomorrow is a Friday before holiday weekend, and we've got the 4th of July coming up. Next week, it gets really interesting. There's a lot of stuff coming out. I'll save that for this afternoon or tomorrow's broadcast. Anyway, just wanted to share those thoughts with you. Look forward to having you over in the trading room. Again, always remember that this channel is for educational purposes only. We're not trying to give you investment advice. We're just trying to share our experiences in how these things work. So always keep that in mind. I forgot to put the little legalese thing up here this morning. Nobody wants to read it anyway. But anyway, just always remember that. And we truly appreciate your support. Our channel is new. We're trying to build it now. We're not new, but the channel is. We're new on YouTube and Rumble. And we're out to build, our goal is to build just a great trading community where I can share 35 years of experience and insights about swing trading and day trading. So if you like this information, hit the like button, consider joining the channel and getting notifications. We're going to build a lot of great content here. There's already a lot of great content over on the website. And we'd love you to be a part of this community and join us and share ideas. I mean, we all work together. We're in a fourth turning. This is a very difficult time. I think most of you feel that stress. I know I do every day. Sometimes I feel like I'm in a dream. It doesn't feel real. When I have too many feelings throughout the day, like I'm riding in an elevator, I know I'm in trouble. And the outrageous things going on, not only here but around the world, are just mind-boggling. So it's a tough period, and we all need to work together to get through it. And that's what this channel is all about. Anyway, have a great day. Don't forget to try to join us over in the trading room at blueprinttrading.com or blueprintquantitative.com. And we look forward to having you there. Have a great morning. Bye.